just rolling into work, getting stuff set up. But we're gonna address the issue of why it's a bad idea to pay off your rental quickly. I'll just talk about it briefly because I don't wanna waste your guys' time. But real estate, if you guys know me, you know I love real estate. I think real estate is an incredible investment opportunity. It's a great way to make good money, right? For a lot of different reasons. One of the biggest benefits though, is that you are using the bank's money, all right? So paying off, especially a rental, yes, you have a little bit more security, but it's a terrible idea in that you get to use the bank's money to make more money, all right? And it's especially a bad idea if you're thinking about retirement and you're thinking you need to pay off your home before you go into retirement. Again, not necessarily a wise idea. There's really no benefit to paying off your home's rental or personal early. The reason, let me give you an example just to kind of show why this is the case. So let's say you've got $500,000, all right, and you have a rental property and the mortgage on it, not your down payment, but the mortgage would be about $100,000. And definitely do it over 30 years because it's kind of the same principle just with a 15-year or 30-year, but 30 years is better. Right now, mortgage rates are super low. So the bank's gonna say, hey, you have good credit, I'll give you $100,000 to have this rental property, right? Maybe that's 75, 80% of the total value, your mortgage, and we'll give it to you at 2% or 2.5%, let's say, all right? You might be asking, well, why don't I just pay for it myself? And then I own it free and clear, no mortgage. Here's the thing. With $100,000 of your own money, can you not make more than 2 or 2.5% a year? I hope you can. That's like, you could just put it in an ETF and probably make 8%, right? And so it's like the bank giving you $100,000 so that you can grow your money still. So it would be like the bank giving you $100,000 at 2%. You get to keep $100,000 of your own money and then net at least 6%, right? If you made 8%, your mortgage is 2%, you net a 6% gain. And so what people think about is, oh, well, man, a 30-year mortgage, I pay for the house 2 times over, 2.5 times over. That is true. You're looking at the savings only. You're not looking at the money you could be making, right? If you look at the money you could be making over 30 years with just an 8% return, which is very low. If you know me, that's terrible, right? You're making more money in almost any other investment. And so in the long run, although you're paying more technically for the rental or your personal house, you are making more, much more. And that's why paying off your rentals, paying off your mortgage early is a terrible idea. In my opinion, I love rental properties. Get the longest terms you possibly can, 30-year, the lowest rates, obviously, you possibly can, and keep it leveraged. If you can make money on it while it's leveraged, why would you not do that? The bank is basically giving you money. So that's a quick tip for today, why this is a really bad idea.